This is a market review for February 5th, 2025. Today, as you can see, we were bullish. We had a a discount opening for today. We worked bearish initially with this wick here, and then played bullish throughout the rest of the day. If we look there, stayed above constant encroachment of this wick. It's a good sign. On the hourly, I was bullish today. We'll go over on the hourly because it's easy enough to see from 2 to 7. Oh, 2 to 7. London goes from playing bearish to reversing and playing bullish, right? So what does that tell me? That tells me that New York is likely going to continue that move that London started by reversing. So in this example, London started bearish, reversed, and switched to bullish, which means that New York should carry that through. Anything else on the 1 hour here? We have this hour of fair value gap between these two wicks there. We extend that through. We see that it gets a reaction here, which validates it. So if we extend that here, this is a place where price is likely to, once it closes outside of this fair value gap, once this candle closes, the next one is likely to come visit it. And there's actually one on the 15, which we'll get, but price took out this high and this high, and then kept pushing higher and higher. We had a little trouble here, as you can see, around the wake up and gap. But now on the 15-minute, we had another inverse, right? This one here, another bearish fair value gap, sell side imbalance, buy side inefficiency, validated with this rejection here. And with these closes up here, price comes down and uses it. Heck, it even uses it here. Right now, if I'm being completely honest, I don't know why it comes all the way down here. Actually, scratch that. I do. It'll be easier to see on the 5-minute, but this right here, this orange line is equilibrium of this move. Right there. Right. So from this low to this high where the retrace started, I'm not really counting news because that was a manufactured spike of price. So using this high, we see that 50% is right here where this orange line is in the middle. Price is likely to come below that to allow smart money traders to enter at a good price. So enter longs at a cheap price or enter shorts at a high price. In this situation, price comes down below equilibrium, which is why it came back to this 15-minute, in my opinion, so that smart money traders had a cheaper entry for their longs. Apart from that, price rallied. Didn't really see a lunch reversal. Kind of did in a sense, which you'll see more clearly on a lower time frame. But we pushed up higher, took out this high as well here, and then started retracing here inside this 15-minute, playing off of another past first presentation for value gap, and then expands higher. Down to 5-minute, we have nothing by the looks of it here. But that move, that move that I graded a bit is easier to see here. Take the low, and then we follow price all throughout here. Keep going up, keep going up, keep going up. Bang. This is where it starts. And like I said, this wick up right here, that's created by news. So in my mind, that's gone. As you can see, price retraces below this equilibrium into this 15-minute here. So that is why my thought is why it reversed here and not at this 1 hour. Nothing there, nothing there. Here's what I was talking about. Usually lunch reverses the move of morning session, right? London closes at 11, which could be the cause of this decrease here, right? This bearish move right here. And so it's possible that since the closest move to lunch was bearish, lunch took over and went bullish. Or another option is we create this price swing. Boom, equilibrium's right here. We already retraced past equilibrium. So price is ready to load and go, right? This is very balanced price action here. There's a gap here on the 1 minute, but this is very balanced on higher time frames. So anything below equilibrium, especially with how explosive and expansive we have been to the upside with price this week, it's likely to take the closest fair value gap under that equilibrium. And then it expanded. So that's another reason why lunch didn't reverse like usual, is because the retrace was already made beforehand. But again, that's merely speculation on my part. We push up, get stopped at this new day opening gap after taking this liquidity. Retrace here. Didn't come back to equilibrium of this. Not entirely sure why, but this first presentation here, this box is giving us trouble 1, 2, 3, 4 times. Algorithm kicks back in 130. We work our way higher. Last hour of trading seeks out untouched liquidity. We have sell side right here, takes that, and then boom, what's untouched? Buy side. So we take that. And then we end off the day. There. Just 1 minute. I'll go over my entry real quick. So I entered here on this blue candle, I entered longs. Once this candle entered this, we had 10 o'clock news. And once that happened, price boom, went up. This is what I was talking about on the higher time frames. This wick right here, 100% news, right? In my mind, that has no meaning, which is why when we graded this move here, we didn't take this one, but we took this one because that, in my mind, is pure price, not the manipulation that news is. So, enter longs here, and obviously, as you can see, didn't last very long. Now, here's another reason I entered. Saw an SMT. ES made that low there, and Q didn't. SMT, in reality, here's what I should have done. I should have seen this rejection. I should have won, boom, 10 o'clock news, right? If 10 o'clock news pumped and just kept pumping, closing higher and higher, fine. But it pumped all the way up here, right? All the way up to 21,613, but it closed below this high, right? At 589. So the 20 handle retrace on a 1 minute candle after news, probably not what you want to take as a bullish indication there. So that's what this is with that. There's also an SMT up here, but that I wouldn't have been able to know until after the fact, of course. And so what I have created as a rule now is I can't take a trade until 5 minutes after red folder news, right? Because if I had to wait until 10 to 5, I would have been fine. Because down here, we're in this 1 hour, spike down to this 15-minute. That's low taken. Right? I may have entered here because again, SMT of these lows may have entered here, but either way, my stop would have been constant encroachment of this 5, 10, 25 minus a couple pips. Why? Because the low of this candle, if you look up here, 510. All right, so that's just enough, one tick below that to get a fill. And that's why I like to have it a couple ticks below the concentrate encroachment specifically. Now, another place I could have entered would be this inverse right here. Because again, sell side imbalance, buy side inefficiency between these two candle wicks. We get a rejection off of it, validates it in my mind. Expansion, closure outside of it. Boom, return to it. Reaction off concentrate encroachment. I would have entered here. Stop would be at concentrate encroachment of this wick minus a couple ticks. Then, of course, we'd target liquidities. Again, another order block here could have been used. I wanted to see, since this did give a reaction, if it would work as an inverse and send us lower, but the overall higher time frame bias held there. As you can see, this is the 1 minute fair value gap. I was explaining on the higher time frames that price wanted to retrace below equilibrium. Again, equilibrium is probably around here, and the only gap below this one is this one. And with how bullish price has been the past couple of days, do you really think price is going to come all the way down here? No. So use this here. Potential reason why lunch didn't retrace is because, boom, it already happened before. Again, expansion, new day opening gap reaction, retrace into 15-minute fair value up here, and this 5-minute here, and these 1 minutes, but I would have no chance at picking out the right one for this to stop at, if I'm being honest. Algorithm ends. Usually, if we're bullish, I look to see a sweep of sell side and an SMT. If I'm looking to enter, we get some sweeps. If we get rid of this, we have one here. Sweep, no SMT. Sweep of these liquidities, no SMT. The only SMT we do get, I'm sorry, before I get there, price just kind of just chomping its way higher. And then boom, last hour of trading happens. Last hour of trading, let's do the 15 to 45 macro. Boom. What does it do? Untouched liquidity takes that. What's the next untouched liquidity? Sell side, boom, takes that. SMT here. Inverse fair value gap validated with this rejection there. Closure above it, spike down. My stop loss would be concentrate encroachment of this wick here, targeting this high, because again, last hour of trading takes any untaken liquidity, and then come all the way up here, and then meander off the high for the day. Far as the rest of the week goes, today was a big day. Today was a huge day. I mean, from 5 until, heck, even now, we're still pumping. So tomorrow, I wouldn't be surprised if we see a retrace, right? So tomorrow, I would be okay playing bearish. I think as of now, we kind of need it. If we grade this here, equilibrium's this line right here. So anything below that, we might just come low into here, or heck, even use this inverse, this 1 hour inverse here. I like that. I would be hesitant to continue to play bullish, if I'm going to be honest. This is a whole lot of bullish action without any bearish retrace over it. Now, these wicks are very balanced, so are these, but I don't like this. It makes me feel weird having such a big expansionary leg. So tomorrow, I'm not going to say definitively that I will be playing bearish, but that's what I'm leaning towards. But again, depends what London does, because that really sets up my short time frame bias, and then for the lines with a high time frame bias, good to go. So this has been a market review for February 5th, 2025.